In syndication, what it's allowed me to do is, one, buy bigger properties, better properties than I ever could on my own, but two, diversify my own portfolio and not just have all my money and all my eggs in one basket. So I invest alongside my investors in each deal, but I'm investing, a portion of my wealth in each deal, as many of the investors do as well. And so it allows diversification. It allows us to get bigger assets and higher quality assets.
You're listening to the Rich State of Mind Show, the podcast made to make you the total package in the entrepreneurial world and give you what we call a rich state of mind. If you are here looking to learn about real estate investing, marketing, elevating your business, and developing your mindset to get to the next level, then you are at the right place. Stay tuned and be sure to join our community on richstateofmind.com. Now here's your host, Anthony Ritchie.
Hey everybody, welcome back to another episode of Rich State of Mind, where I'm talking to Kent Ritter. Kent is an entrepreneur and a real estate investor. And one of his first ventures, he was actually in a management consulting firm where he played a central role in growing the company up to 95 employees and 30 million in annual revenue within just 5 years, which that's freaking awesome. After a successful exit, Kent saw the opportunity in real estate, and he founded Hudson Investing, a multifamily private equity firm, and a podcast, Ritter on Real Estate. So you've probably even seen him on other podcasts as well. And that's where he's been sharing his information that he's learned over the last 10 years to help other entrepreneurs expedite their success process. So please welcome Kent. Loved this episode with him. And as always, please enjoy.
Hey, Kent, thank you so much for taking the time this afternoon for me, and your central time in
Eastern.
So you're considered Eastern. So yeah, this is just as late for you as it is for me. So if you could please just tell us a little bit about you and what you do.
Yeah, absolutely. Well, first of all, Anthony, thank you for having me on. Excited to be on the show today. And yeah, what I do is, I essentially help people make money through real estate. And the way I do that is by syndicating apartment buildings, which really what that means. A syndication is really just people pooling their money together to go out and buy something bigger and better than any of us could on our own. And so I started out really as a passive investor, passively invested with others for about 3.5 years before and really just used that to understand the business and get good returns along the way, until I did my first deal where I was actually in the driver's seat and leading the deal. And now since 2019, that's what I've been doing. And we've completed 8 syndications. We bought 8 different communities, and and we just pool our money together on the equity side. We go out and get a bank loan, just like buying any other smaller single family home or any other type of real estate. We're just buying 100, 200 units at a time.
And so what made you want to do syndication? Everybody, there's different asset classes. We talked about short-term rentals, long-term rentals, with residential properties. Why something like this? Why syndication for you?
I got great advice. I'd say I had a couple mentors at a couple of really pivotal times in my real estate career. And the first one was don't spend your time on the great advice I got. First one was don't spend your time on single family, go straight into multifamily. And when you start doing the math on how many single family houses you would have to buy and to be financially free, and you start actually going out and buying houses and understanding what a time intensive process that is, you realize that's a lot of transactions, and that's a really difficult way to get there. In multifamily, instead of buying 100 houses, I can buy 100 units under one roof in one transaction. And it's just much more streamlined. There's a much better scale. So that was pivotal piece of advice number one. The second was I planned to go out and buy an apartment building like that all on my own. And the great advice I got was, well, okay, what are you going to do after that? And I'm like, well, what do you mean? I'm going to own this apartment building. And they're like, yeah, but all your money will be spent. You don't have any more money to invest. All your eggs are in one basket. And now you're stuck being a landlord. I'm like, okay, well, good point. Well, what should I do? Syndication. So in syndication, what it's allowed me to do is, one, buy bigger properties, better properties than I ever could on my own, but two, diversify my own portfolio and not just have all my money and all my eggs in one basket. So I invest alongside my investors in each deal, but I'm investing, a portion of my wealth in each deal, as many of the investors do as well. And so it allows diversification. It allows us to get bigger assets and higher quality assets. So when I heard that, it just, that was when kind of all the bells went off for me. And I knew like, this is exactly the best way to go out and approach investing in real estate. And because we buy the assets that we buy, I can have professional management. We can have a lot of scale, and I'm not stuck being the landlord myself and dealing with the toilets, the termites and the tenants and everything else. That is just not my passion, not my core competency. It's one of the core things I believe, and we'll probably talk about more, is you got to figure out what you love. And if you're doing something you don't love, you got to do something else. And so I don't love managing properties. So I hire people that do love managing properties because I know they're going to do it a heck of a lot better than I am.
I'm glad you brought that up as far as identifying what you love throughout your, we'll just say, investing journey, period. I started out, owning a few smaller properties. And then after a while, I was just like, yeah, I'm not doing this anymore. And that's not that I feel like I'm above it. There's some people that are great landlords and they get their 30 to 50 units that they can manage at their level with their team, or maybe even by themselves, them and their wife, and they make it work. And it gives them their freedom number and they're good.
Yeah.
But for some people like myself, I figured there was a different way to where I'm not getting the same headaches. And I don't mind, like an operator, I don't mind putting in a lot of the work up front and then just cashing out, refinancing later, and then moving on to something else because I've realized in my tenure as a real estate investor, I will get tired of a particular thing and then my passion is gone from it.
Mm-hmm. Yeah, no, I definitely understand where you're coming from. I was a management consultant prior to being a real estate investor. And so as a management consultant, what I did was I flew around the country helping companies solve problems. And the reason I love that is because it was a new problem every week. It was a new thing. It wasn't sitting in a cubicle doing the same thing over and over again. I can never do that. I did an internship as an accountant in college. Thankfully, I did, because it made me realize I did not want to be an accountant. I went back and dropped my double major in finance and accounting. I dropped the accounting, and I never looked back. And I looked for a career where I had a lot of flexibility and a lot of new things. But I think real estate investing really, is really similar in that there's always a new adventure. It's always a new problem. Like real estate investing is just all about solving problems. And, it's really how effectively can you mitigate problems, and then how can you solve them when they occur, because they're going to happen. And so there's always something new. I'm always learning something.
I talked about that often in the podcast when it came to COVID. A lot of people ended up, unfortunately, having to foreclose on their homes. The landlords, had to short sell their homes, or actually maybe not even short sell, because some properties went up actually during COVID timeframe in value. But it was all about pivoting as an entrepreneur, understanding, all right, cool, this is what's going on, but I'm not going to let this, crush me. I can come out from under this. And so I truly believe in, as entrepreneurs, when it comes to investing, it's all about just identifying, don't get rolled, identifying the problem and then figuring out how to get past it so that you can continue to succeed. And maybe even if it means you broke even, as long as you didn't go negative or you completely lost your business, you was able to get out of there and you had made an adjustment.
Yeah. I mean, as long as the thing cash flows, right, you can live to fight another day. As long as you can, and that's why that's the first thing I look for in my investments is cash flow. I mean, I think appreciation is all speculative, right? Like who knows what's going to happen in 5 years? I mean, you project it out in a model, and most of it is based on what your exit cap rate is, right? And that's everybody's guess. So, but the thing that's concrete is the cash flow. So I look at the cash flow first, because if the thing cash flows, as long as you can pay that bank mortgage, you can live to fight another day. You'll make it through, and over the long term, real estate will appreciate. One thing that I thought of, though, just as you were talking about COVID and needing to pivot, kind of my own personal story. I used to raise money primarily from going to conferences and meeting investors. and building relationships in that way. Well, when COVID hit, there were no more conferences. So I was probably going to 10, 12 conferences a year, no more conferences. So I decided to start a podcast because I needed a way to still be able to reach out to people. And so I started a podcast during COVID. It's called Ritter on Real Estate, if you guys want to check it out. And it's been a game changer. I mean, it's allowed me to reach such a broad audience. You can only have so many one-on-one conversations, but with a podcast, as you know, you can reach thousands, even millions of people. And so just COVID brought that. I was able to pivot, able to take a different direction, get out of my comfort zone, because it definitely was not in my comfort zone to think I'm going to just like throw my thoughts out into the world like that. But but I was able to do it, and ultimately it's been a great experience. But so I think that's one of those pivots where you either look at things as obstacles or opportunities. And I think one of the important things about an entrepreneur is you've got to have that mindset where you see everything as an opportunity. I mean, same thing with real estate investing, right? Like I just said, you're going to have problems. It's all about how you solve them. It's figuring out what you can do.
I'm so glad you said that. I was just talking to my sister about that, as far as looking at obstacles and look at them as opportunities instead. It's all about the mindset. Don't get me wrong. I mean, I don't want people to believe like I can do anything, right? And you jump over and try to fly, but there's a lot of things where you try to find the yes to it. I was talking to one of my coworkers today where oftentimes I get on the phone with maybe a telemarketer or somebody from another job where it's, hey, I don't know how to do this, or it can't be done right now, blah, blah, blah. I'm like, well, let's figure this out. How can we get to the yes to where we could figure this out together? I say 6 out of 10 times I can't get them to do that because they're like, hey, look, I just get paid to tell you no or yes, and I move on. But a lot of times, especially if it's something that's going to help, me and my family, I'm like, well, I don't like just taking no and just keep it at, well, it can't be done. Well, have we tried this? Have we tried that? Well, actually, no, we haven't. All right, well, let's try this out. Put a plan together, and then we could say we actually tried, and we, looked at that, took that obstacle and turned it into an opportunity. I'm really big on that. My wife, though, keeps me in check to make sure I don't push the envelope too far, because sometimes I can go like, all right, you're really pushing it to the edge to really try to make this thing work. But yeah, and that's the balance that I have with her.
Well, that's what, wives are good for that, right? They're a good anchor to, make sure you're keeping one foot in reality. I mean, I have the same problem. I can get shiny object syndrome a little bit and, see all these opportunities. It's great to see opportunities, just when you see too many and you want to go after them all at the same time. Right. And so, I think that's what wives are great at.
Yeah. So I had a question. You said, as long as it cash flows, you're comfortable. Are you looking forward to cash flow before you add value or after value added?
So traditionally, everything that we've done is kind of quote unquote value add versus something that's
turnkey or as is.
Yeah, or I was even trying to think of what's the word the other way. Just like totally dilapidated and totally, something that's totally empty. And so most of the things that we've invested in up to this point are largely stabilized, meaning they've got occupancy and 85+%.
Okay.
They've been cash flowing businesses for 30, 40 years. And so I just look at it as, look, this business has been here for 30 or 40 years. And I look and I just project out and say, if things are going well in that market, there would have to be something catastrophic to happen to wreck this business. Right. And because that's what apartments are, they're businesses. And so I basically look at it as, okay, it's making money. I'm just going to help it make more money. And because of that, it's a very low risk, relatively speaking, type of investment, because it's something that's already cash flowing. Now, recently I've gotten more into new development, just with the kind of the cycle of the market and the prices of where they are to buy existing. And then that's a different model, right? There's a lot more risk on the front end because you're not cash flowing, right? And you're putting money out before the cash flow is coming in. But so that there's room for both. But yeah, traditionally what we've bought have been cash flowing assets that we know we can come in and there's a deficiency that we can identify and we can solve. And so maybe it's management, maybe it's a lack of capital. Like some properties that we buy are from mom and pop owners and they run them fine, but they didn't have a big CapEx budget
Yeah.
like big chunk of money set aside to come in and make a bunch of improvements, right? They were just making improvements here or there out of their cash flow. And so, maybe renovations have fallen behind, right? That's a great opportunity where we know we can come in, we can infuse capital into the project, we can sexy up the apartment, right? And we can, in doing that, make new nice units and raise rent. And there's value to be added there.
That's awesome. And so you're doing this with your real estate investing company. What's the name of it?
It's Hudson Investing.
Okay. And so this is the part where we start kind of talking about the company part of it, the business part, with everything that we talked about so far, as far as what you're looking for with a syndication, you as a real estate investor, what you're looking for, how are you able to align what your goals with your business?
Yeah, that's a good question. I look at, my mindset has shifted where, I started very much in this as a personal endeavor, really to invest my own money and make good returns and diversify outside of the stock market, right? So somewhere along the way, as I was having some success investing on my own, I started running my own deals, right? And started investing other people's money. And it kind of grew organically, right? But the reason I say all this is because there was a point in time where I said, wow, if I'm going to take on other people's money, this can't just be a hobby. This can't be just something that I'm like figuring out. Like, it's one thing if it's your own money. If it's other people's money, that's a different thing, especially if it's people I know. And typically you start with your friends and family. And I was trying to avoid very awkward Thanksgivings, right?
Of course.
And so in my background, which we didn't really cover, I have started a business before. Started a management consulting firm. Ran that for about 6 years, and we sold that business at the end of 2015. So I had some experience already in growing a business and knowing what we had to do. So when I decided to take on other people's money, it really became serious for me. And I said, okay, I can't just go at this as a hobby. I got to go at this as a business. And I got to bring a lot of the principles that I knew from my management consulting background and from my entrepreneurial background, and say, like, I got to infuse this into real estate. And so I came up, you do where you should start. I came up with a business plan, right? It starts there. It's, what are we going to do? Why are we going to do it? How are we going to be better than everybody else? Right. And kind of map that out and map out what, even to the point of, what does the org chart look like? Right. Like, who's like, okay, I know what direction the ship's going, but who's on the ship? Right. And starting to map that out. Way before I was even going to hire any of those people, but just knowing the people that I would need and the positions that I would need. And that really helped me over time know, okay, well, when do I need that person? Right. Or to know, okay, I can't step out of that role until I replace myself in that role. And that's the only way that I can move up. It's like, you can call yourself the CEO of anything, but a CEO of a Fortune 500 company is acting very different than an entrepreneur, because they have layers below them that allow them to operate at a very high level, right? So you can only operate at that high level by filling those layers in below you. And so I wanted to get all that mapped out, right? And even as far as, this didn't all happen in like one session.
Of course,
cranking all this out. but over time, then I started so you start getting people on the ship, right? You start filling in those. And first it started just with an assistant. I think that's one of the things that can give you the most leverage out of any role, is just having an assistant to take a lot of the stuff. You'd be surprised if you really pay attention how much time you spend scheduling, like just calendar stuff, right? And just answering emails, and just like little, like scheduling travel, like just a huge time suck, keeping paperwork organized. So that's a huge leverage point. And so you got to find leverage points. Same thing with my podcast. I'll give you an example. When I first started doing my podcast, for the first 6 months, I did it all myself. I was editing, like I was doing everything, uploading it all, advertising it. And what happened? Well, I was inconsistent with posting because I wouldn't get to it, or I was spending too much time editing to actually look at deals, and it just wasn't working. And I didn't see growth in my podcast for those first 6 months. It wasn't until I systematized it, brought in a team, and allowed myself to just step out of those roles that, again, like, those aren't my superpowers. I'm not the expert in that. There's people that are a hell of a lot better than me. And my highest and best use is not learning how to edit audio and video, right? I need to pay somebody that knows it better than me. And so it took me 6 months to learn that. But once I did, and once I got consistent, then the numbers on the podcast really started to take off. And I just think that's kind of the microcosm of, if you're stuck down in the trenches, you can't be operating at your highest and best use. You got to find people to fill those roles. I believe. So I guess that's delegation, right? You got to learn to delegate. There's some common trends in all the hundreds of businesses I saw as a management consultant. One of the things that caused businesses to fail was the inability to delegate effectively. I mean, that was like the top of the list on almost all of them.
The other communication was going to be.
Communication 100% is, but if you can't even delegate, there's nobody to communicate to.
Mm-hmm.
So it's being able to give up control. Right. And you got to be able to recognize that, like, look, this is your baby. It's not anybody else's baby. Nobody's going to treat your baby like you do, but you got to get comfortable with 80% right is good enough.
Yes. I read that somewhere.
If you have that mindset, you can start to let things go. Because what's the alternative? Well, everything's 100% right, but only like 1 out of 20 things you need to get done got done. What's the quote is like, done's better than perfect or something. Like, it's 100% true. If I was waiting for my podcast to be perfect, I would still be waiting. Right. I mean, you got to improve through iteration, right? You got to get started. And that's the only way you get better. And another big thing I believe in is just specificity of role, in that meaning that like when you bring people on, don't try to spread them too thin and have jacks of all trades. You need to have, okay, what's this person good at? And just the more you can have them doing the one thing or the 2 or 3 things that they're good at 100% of the time, the better, the happier they're going to be. So, I'd rather than having one person do 10 things, I'd rather have 3 people that could do those things, and they could go deeper into each of those and be better at those. And so in that way, I build out that team essentially. And as you build out a team, what becomes critical is, well, how are you measuring? How do you know if what they're doing is successful and what you want them to do? Well, you've got to be able to measure it. So you've got to have metrics, KPIs, key performance indicators. And again, you don't want everything under the sun. You want like 2 to 3 things that are really critical for each person. And then you want goals for those, and that's how you know if the person's effective. Did they meet their goals to those metrics? And it becomes really transparent. And it's not like performance reviews shouldn't be this kind of like squishy, like, I feel like I did a good job type of thing. It should be very black and white. Like, did you do a good job or not? Well, did you hit these goals that we set out, that we mutually came to, right? And you signed up for? Did you hit them? I mean, it's very black and white. And so, in that way, then, so they've got goals, they're performing. Well, you've got to have, ways throughout kind of the weeks, months, quarters to hold people accountable. You've got to have reporting that you can see, right? And then you've got to have feedback loops. So we brought up like performance reviews. Well, that's something that might happen once a year, right? Like old news doesn't do anybody any good, right? You need to be consistent and timely with feedback. And so if somebody does something that they shouldn't do, you need to deliver the message, in a respectful way, but you have to let people know, because most people are trying to do the right thing. Most people aren't out to like sabotage you. They just may not know. And a lot of people, where leaders get in trouble is they're running so fast, they don't provide context to the people on their team to understand, how does their role impact the business, and how does their role impact the other people in the business? Because they may be like the easiest example is like an assembly line, right? Is if you have the first guy presses this button and that's his job, but he doesn't know what happens when he presses that button, right? He doesn't know that when he doesn't press the button, it screws up the guy 8 people down, in the back of the line, and nobody's telling the first guy what happens, right? So he's either pressing the button or not, he doesn't know. So you got to have those feedback loops, right? Where the guy that the eighth guy down is telling the first guy, hey man, when you do that, this screws me up. Don't do that anymore. And it's just funny how often those simple, they seem really simple, are lacking in businesses. And so I think if you're delegating, you're finding people, you're allowing them to be specific in what they're good at, right? And you're measuring and you're setting goals. I mean, those are like the key components to, I think, to be successful. And as a leader, you got to be comfortable letting go and kind of let all this happen.
Your leadership style reminds me of a book I read called The 1 Minute Manager. It's by the same guy that did, I think I did Where's My Cheese?
Okay.
And so, and it is a efficient style because it also allows that, that employee, that coworker, that teammate to have a clear direction, right? When you said you provide, milestones, goals, hey, this date by this time, it allows that person to give that person time to complete the task. And then you provide performance reviews to give feedback on what they did and, how they can do better. And it's also a good time to kind of reassess job description. Maybe as the year had passed, let's say you do it annually, you realize that this job needs also this other task added onto it, or maybe taken away, and we could use that as a different job.
Yeah. And I think a lot of people, they're looking to have it all right at the beginning, right? The perfect job description for exactly what you need and the perfect person to fill that role. And that's just not going to happen. It's like I said at the beginning earlier, it's like you improve through iteration. So the only way that job description needs to change, and maybe that role needs to change, is by getting somebody in that role and letting them start to do it, right? And that's how you figure out if it's the right person. Also, is it the right role? Maybe that role you've identified is just too much stuff for any person to actually do. And you recognize that and you split that out and you bring on another person.
In episode 72, we called it, you got to delegate to elevate.
Oh, there you go. I like that.
That's what she had said. Episode 72. All right. I like that little saying too. It's been in my head ever since, actually.
Yeah. Well, it's catchy and it's 100% true.
What are some positions that are unique to real estate investing company? Like assistants, pretty much every business style I've seen required that, but what would you say was a job that was unique to real estate?
I mean, there's a couple. I mean, underwriter would be one. I mean, underwriters or analysts exist in a lot of different capacities in different fields, but specifically in real estate, an underwriter, somebody who's taking the numbers in and putting it into a model and giving me something that I can react to, right? I mean, that's pretty specific. I think another one is, so maybe this is helpful. I look at the business in 3 verticals.
Okay.
I look at, you have deal flow, right? So you have new deals coming in. You have like money raising or capital, right? And that's really your capital stack, and debt and equity, right? How are you going to buy these deals? And then you have execution. And execution is, how are you performing on the assets you already own? And so the reason I say that is because, like, if you think about the underwriter as key to that deal acquisition piece of it,
okay,
right? Then an asset manager is critical to and oversees the execution piece of it. So that's a person that's in charge of making sure that the business plans that you've outlined for those deals that you've already purchased is happening, and that the property manager and the contractors and everybody else are executing, right? And we're realizing the plan. So, I mean, that's a unique role, I think, and it's a critical role.
How often do you find yourself having to meet with your team to ensure that the business is running how it should?
Oh, I mean, weekly at least. I have one-on-ones weekly, and then we meet, outside of that, just as we need to. But I mean, we're in constant communication through Slack. Slack has been just a game changer for me. I mean, just going from email where you're just constantly searching for stuff, things get lost, and I get hundreds of emails a day, to Slack, which is just kind of a messaging platform where you can define specific channels. And, like we have a Slack channel for each deal that we're going after. And so everything about that deal is just contained right there. And you can link files and everything's right there. It keeps everything organized. That's huge. and it's on your phone. So it's just like texting. We also use a tool called Monday.com, which is like a project management software. And it allows me very quickly to kind of look across what everybody's to-do lists and see where they're at versus timelines and goals, and gives me that dashboard.
I've heard about Slack. I mean, not Slack before. This is the first time I've actually heard about Slack. So I'm actually writing that down to check that out myself. But Monday I've heard about before, and project management is near and dear to me because that's also the degree my degree is in. So I'm going to also check out Monday because I keep hearing about Monday and how effective it is. And I'm really big on keeping up with, I use Outlook for most of my tasks when it comes to tasking others, stuff like that. But Monday I'm going to check out as well. So thank you for mentioning those two resources.
Yeah, I think you've got to have a way to keep everybody on the same page, and with a remote team, which my team is completely remote, that was the best way I could find to keep everybody on the same page and make sure everybody, knew exactly, like if I need something from marketing, I can put it directly on our board and put a deadline and say, okay, here's what I need to buy. And it's not like this back and forth email. I have to make a phone call, all that. So it's all about efficiency and visibility.
No, and you're right. Especially, I'm big on CPI, continuous process improvement, because I hate it when something. I feel like this could be a whole lot simpler. I'm pretty sure you felt that before. Like, there's got to be an easier way to do this. Why is it taking us this long to do X, Y, and Z? And so I'm always big on. But you can't do that. You can't have the time or the capacity to even try to figure out how to improve a process if you're in the weeds and still editing your podcast, right?
Yeah. I think maybe that's a good like marker that you're in the right spot, is if you have the brain capacity left over to start thinking about how things could be better. That probably means you're moving in the right direction, because you're right. If you're in the trenches, all you can think about is what's directly in front of you. You can't think about, what's happening next week. There's no strategy in that environment.
So, as you were building your business, I think we talked about, identifying the positions, but at what point do you say, all right, let's just say for the underwriting portion, you start off underwriting your own deals at first. Yeah. And so at what point where you're like, hey, I need to delegate this to another person? Was it because there was so much deal flow coming in? Was that kind of your turning point?
Yeah, absolutely. I think what a lot of people don't realize about real estate is it's a volume game. You've got to look at a lot of deals. I had a mentor tell me years ago, and it's exactly the truth, is like, if you have 100 deals to start with, you need to be able to cut out 70 of them right away, underwrite 30 of them, put offers in on 10 of them to win one. And I found that to be true. So, it really is a volume game. So if you're putting out, an LOI, a letter of intent, right? If you're going to make a purchase, is where you start, once a month or once every couple of months. That's just not enough volume. My intent is to put out multiple LOIs every week. And the only way that you do that is by having a team to support you. You can only underwrite so many deals, even if you have a great process, which we've defined. It still takes time. So anyway, to your point, it was all about, I've increased my deal flow because I've made better broker relationships. We're in more markets. I need people to help me now get through all these deals so that we don't miss opportunities.
What's your end goal for your company, as far as what do you see yourself doing in, let's say, 5 years with your company?
Yeah, that's a good question. I was actually just working on this with one of my coaches, is what is your where do you see yourself in 5 years? So I have a pretty clear vision of that. It's, really from a business standpoint, it's that I'm at a place where I can step out of the day-to-day completely, and I can really just look at it totally from a strategy standpoint. And because I've filled the right people in the right seats and everybody's moving in the same direction, right? And I can check in weekly and know that everything is taken care of. And it allows me to go off and continue to do bigger, better things. So, ultimately that's how I'm building my business. I had a manager at one point when I was new as a consultant tell me that, my goal was to really figure out how I could replace him. Like work to replace him should be
Mm-hmm.
my goal. And that's how you get promoted. And I think it's true. That's how I think about my business is ultimately I'm trying to work myself out of a job by finding people that are better than me. I mean, I may be good at all of it, but finding people that are better at each individual piece of it,
Yeah.
right? That ultimately it comes together that they're better than I am. It's like, if you're the smartest person in the room, you're in the wrong room, right?
Yes.
You never want to be like, I never want to be the best marketing person in my company or the best underwriter in my company. Right. That means your employees, maybe aren't that great. So that being said, yeah, that's where I want to be. I'm building the business to a point where, it really can operate on its own, and it gives me the flexibility to do what I'm going to do and to continue to grow and take on new ventures and go into new areas. Like I said, this year we're going to do 3 new ground up developments this year, which we've not done before. So without the leverage back here and the stuff that we've done already, I wouldn't be able to forge ahead into some of these new things.
No, you have a great point. Where can people find you, man? I really want to make sure people can find you, look, and see if they can get into your future endeavors as well and invest.
Yeah, absolutely. So you can go to kentritter.com. That's the easiest place. That's my home base. You can access the podcast there. We've got a blog. We've got if you're a new investor, we've got investor FAQs and tutorials and things. So check that out. And then if you listen to podcasts, which you are, so you obviously do, you can check out Ritter on Real Estate. I'll be right up there with Anthony's podcast and everybody else.
Pretty dope that you was able to use your first and last name as your domain. Nobody had it.
There's not a lot of Kent Ritters. I'm not like Michael Johnson or something,
Yeah.
So yeah, I was able to snag that up.
Yeah, that's pretty cool. I know people I've had to use somebody already has my Gmail. So I did Rich State of Mind 1, so I know sometimes you got to make a little adjustments or underscores here and there. And so I always ask every guest that comes in here, I always ask what their big why is, or what we call is what is your rich state of mind? What is your big why as to your transition to real estate and why you continue to do this? Obviously, you love doing it. This is not something you just I guess I'll get it this morning and do this deal. What's your big why, man?
No, I do love doing it, but I didn't know I loved doing it at the beginning. And I didn't start investing in real estate because I loved real estate. That came years later. I started investing in real estate because of my family. And because for the first time in my life, I had a family, meaning, that there was a pivotal moment, like you have these pivot points in your life, right? And there's a pivotal moment for me where we'd had our first daughter, and she's 5 now. And, I was flying off somewhere. I remember heading down the runway and we're taking off. And I had this thought of the hell am I doing? I'm about to fly to some other city for the week. I've got a wife and a new baby at home, and I'm not going to see him. And then it started kind of steamrolling into this, well, what kind of father am I going to be if I'm never around? And, what is my kid going to think about me when they're older, and say, oh, my father was absent and all this stuff. And had this moment on this plane where I'm like, something's got to change. And so for me, the why that I left consulting, which was, a job where you're traveling constantly, was my family and having a family and wanting to be the type of father and husband that I wanted to be. And I knew I was not going to be able to be in my current career.
Completely relatable, a little personal, actually, because that's exactly what I'm going through right now. Obviously, the military people, we sacrifice a lot of our time on deployments and, time for money. And one thing that I've learned to value more than anything is my time. That's a lot of 100%. Things. I don't like wasted words. I don't like having unnecessary conversations, and I don't like being away from my family unless I absolutely have to. And so I completely can relate to that, Kent.
Yeah, awesome. And that's a blessing, man, because there's people out there that are avoiding their family, and so
it's actually very true.
To want to be around them, it's a blessing, and I'm the exact same way. And yeah, man. Well, one, thank you and your wife for your service, but family does have to come first. I truly believe that. And and you got to find, I mean, there's paths out there where you can have it all. And I think that's what I found through real estate is I get to do a job I love. I love waking up and going to work every day. And, if the weather's nice, which it's not right now in Indiana, but I can knock off at 2:00 and take the kids to the park and, just
Exactly.
spend that extra time with them that I couldn't if I was chained to a desk.
Exactly. Well, Ken, I really appreciate your time. I thank you for explaining syndication from the business aspect. This will be another piece in the puzzle of people that want to get invested in real estate and more specifically in syndication. I'm really big on hitting different parts of this, asset class, this type of investing, so that people kind of have the big picture. So that going in, it's like, all right, I know how to underwrite now. Oh, wait, I know what deals to find. Oh, I know how to now, amass money, build capital, but I don't know where to put people. I don't know at what point, what positions people need to be in. And so that, all inclusive idea is what I'm looking for. So thank you for adding to that, Ken.
Yeah, well, I hope folks can take away something small, and it makes their life or their business a little bit better.
Exactly. Thank you so much, Ken.
Absolutely. Thanks for having me on.
Thank you for sticking with us from the start of the episode. Please share our show with friends and family, visit our YouTube channel, and view more of our content on richstateofmind.com. See you next week on the Rich State of Mind Show.